So Christmas is soon going to be upon us. So it's this time of the year that I often get asked the same question by our community members about trading. Should they be trading over the Christmas period? What they should be avoiding and how best to approach this period. So today I want to talk about that. I want to talk about the pitfalls, what to be aware of, but also the opportunities that this trading environment does create. Come on, let's go. So why is trading different over the Christmas period? Now remember, when I'm talking about the Christmas period, I'm basically talking about the week leading up to Christmas and the week after Christmas, between New Year. And the obvious reason is that the big players, the institutional traders, the people that move the markets, they're not at their desks. They tend to take extended leave to spend time with their families, whether they actually celebrate Christmas or not. Also think about it. A lot of these hedge funds, these banks, their financial year is at the end of the year, the 31st of December. Now they tend to take their foot off the gas so as not to adversely affect all the hard work they put in the previous 11 months. If on the other hand, they've had a real shocker, they've already written off the year, they tend to take the foot off the gas and have the view that they'll start next year with a clean sheet. So they take time off as well. So what does it mean in terms of liquidity and volatility? Well, it is fair to say that the markets are going to be less liquid. And because the markets are less liquid, they have a real tendency to be more volatile. Now, more volatile can mean that it's going to be winging around quite violently, hitting your stops and profit targets on very little order flow. Now, as we know, when we see a price on the chart, it is the mass result of all the buyers and the sellers at any one given time. Now, if the volumes are light, as they tend to be over this Christmas period, these swings can happen very, very easily because there aren't traders there to basically keep the flow going. But there are indeed some great opportunities. Now, for example, the breakout trader. Now, the breakout trader is looking to exploit those explosive moves that you often see when prices break out of key levels of support and resistance. You know what support and resistance are? Basically, when you have the buyers in control taking the market higher and they're met with a wave of sellers, that often forms the level of resistance. And conversely, if the markets are trending down, the sellers are in control, then they meet a wave of buyers overpowering the sellers, that forms a level of support. Now, if these market conditions have less people taking part, these levels of support and resistance can be broken much easier, and you can see these impulsive moves. So a breakout trader may benefit from this high volatility. My advice is, though, is to make sure you have your profit targets in place, as you could easily see the market break through and retrace pretty quickly. You don't want to miss your profit targets. Remember, high volatility doesn't necessarily mean a strong trend, so don't be shy of taking profits if you are indeed a breakout trader. And what about the scalpers? Now, scalpers tend to love this time of the year. Scalping, as you know, are traders that are in and out of the market multiple times a day, scalping out small little profits as they go. Now, if the markets are whipping around, this can create multiple opportunities for those scalpers. Markets can still have tight ranges when they're consolidating, but there's going to be plenty of opportunity to get in and out in those ranges, of course, depending on the strategy. But again, don't be shy of banking those profits. And of course, always have your stops in place as well if you are indeed scalping over the Christmas period. Now, if you're using automation, or commonly known as EAs, if you're using MT4 or black box trading, be warned. These programs, these are made up of algorithms that are based on previous price action. Now, when these are being developed, tested and coded, they generally rely on a complete data set, not factoring in Christmas, low volume periods, periods of high volatility. So therefore, they're not designed for these market conditions. Generally, unless you know for sure that they have been designed for these market conditions, you may want to switch off your automation over the Christmas period indeed. Beware of the spread. Now, the spread is the difference between the buying price and the selling price, and it's made up by all the liquidity providers providing the prices to buy and sell. Now, with low liquidity, the spreads have a tendency to widen. You see this over periods when the markets are very quiet in the Asian session. That basically means the cost of trading is going to be higher, and also the chances of getting stopped out increases as that spread may indeed move outside of your stop price, resulting in the broker closing your trade. I've seen it time and time again, especially in periods of, as I say, low liquidity in the Asian session, where the spread widens and you lose, you get stopped out on your trade, perfectly good trade, fits the strategy perfectly, but you get stopped out because the liquidity has dried up. Nothing more frustrating than that. So be sure you are aware of the increase in spread. And on that subject of the spread, it's important to note that when you trade in the Forex market, different currencies have different liquidity. So the US dollar, for example, is the most actively traded currency on the planet. I think it accounts for about 88% of all foreign exchange transactions. Behind that is the euro, which is about 30%. Then you've got the yen, 14%, and I think the pound is around 11%. So these are the most actively traded currency pairs. Actively traded currency pairs means the liquidity will be greater, which means the spread should be tighter. If you're trading the currencies against the US dollar, they're known as the majors. So maybe in times of holiday season, like the Christmas season, maybe you should be sticking to the majors. The minors, on the other hand, are the mix and match of all the different other currency pairs. They're less liquid. The spreads are going to be wider, the cost of trading is going to be wider, and indeed you could see prices dry up altogether and forcing a stop loss. Then you've got the exotics as well. Of course, those I think maybe should be avoided in these times of low liquidity. So remember, the spread is very important. The currency pairs that you choose are very important as well. And here's another thing you might want to consider. Maybe it's time to take a break. 2020 has been a horrible year for most. Maybe it's time to just sit back and relax with your family and loved ones. Maybe it's time to reflect and then recharge to kick off 2021 with a bang. Maybe do some studying, do some back testing, brush up on your trading skills and take the pressure off of having to make money each and every day. But one word of advice I will give is this. If you have been hard hit financially over the pandemic, maybe you've lost your job or income, don't try and trade your way out of it to pay for Christmas. It's got a far bigger chance of making your situation much, much worse. Use this time to say study. Maybe start changing and working on your plan for 2021. Okay, so I hope you found that useful. Hopefully now you've made your decision on what you're going to be doing over the festive period. Look, 2020, it's been a bit of a horrid year for most. Roll on 2021. I really do wish you all a very, very happy Christmas, whatever you're doing. Indeed, make sure you stay safe. Have a great new year, and we'll see you in 2021. As always, don't forget to subscribe to the channel. If you don't already do so, tell your friends about it as well. Don't forget to follow us on all the socials. And as all the YouTubers say, hit that bell notification when you subscribe. That way you'll be notified the moment the next video has been released, which of course will be in 2021. Have a good one, stay safe, see you soon.